Hi, I'm Chad, and welcome back to the Industrial Real Estate Show. I try to bring on a wide array of guests on here, and I've had on economists and bankers and lawyers, accountants, and in this one, I'm pleased to be joined by another real estate investor who invests actively in industrial real estate, who also happens to be a lawyer. We're not going to talk about law in this. Instead, we're going to jump into his story on how he started investing in industrial real estate. He currently owns two buildings, roughly about 80,000 square feet total. And then I also want to ask him what his end plan is on what he's going to ultimately do as he continues to build his portfolio. And we get into some of the nitty gritty on how he looks at deals, what his specific metrics are, how he approaches any deals that he looks at. And it's really fascinating conversation that we have regarding an investor who is actively looking at industrial properties and who's purchased them. So I think you're really going to get some value from hearing him talk. His name is Ron Rohde, and I'm pleased to introduce him. Let's jump into it. Hey, Ron, good to see you again. Thanks so much for joining me on the show.
Yeah, good morning. Glad to be here.
So cowboy hat, hey, it's you just living up to the Texas stereotype.
That's right. That's right. Everything's bigger in Texas. So
Well, funny enough, I'm drinking coffee out of a hockey mug leading up to the Canadian stereotype as well. So we're both playing into it today.
that's right.
So that's probably a good place to start. Why don't we jump into the Texas commercial real estate market and probably even more specifically just the industrial market on what you've seen over the last. Everyone's probably curious what's happened in the last 18 months, but whether you want to go even further back to that and just leading up to today, what's a summary of the Texas industrial real estate market right now?
Yeah, absolutely. It's definitely been a wild ride. In my role, I have kind of a unique perspective, right? Because during the day, I have my own commercial real estate law firm, law practice that, we do a lot of industrial work. So we get a lot of leasing, we do a lot of acquisitions, some dispositions. But we have a different view on that side of the market, as well as, as an individual investor, I'm very active as an investor. And so what we've seen in the past 18 months is really just demand that's off the charts. And we've also seen a lot of deliveries. I think DFW was number one for millions of square footage of delivery. I don't know what the statistic is. Maybe we'll throw it up there, like 31 million square feet, something like that. And it led the country in square footage of deliveries. Net absorption, we're absolutely up there. And I think the biggest insight that I've taken away is really this mismatch maybe of large bomber buildings. So these are the 2, 3, 4, 500,000 square foot buildings that are all coming online. Simultaneously, those are being leased, but that is all, 30-foot plus clear height product. It's brand new. It's got 30, 40 dock high doors, huge truck courts. And it's really what is all being traded and creating some of this eye-popping numbers. But what I'm more interested in is what is the market underneath that? What is the market for existing product? These could be 100,000 square foot building, but if it's 15 years old, 20 years old, right? This is built in 2000. It's not out of date by a lot of users' standards. And so again, we're not seeing competition necessarily for existing product. And I think that's really interesting. If you're an investor and you're looking at different markets, just because there is a lot of new delivery square footage and a lot of net leasing, it's kind of operating at a wavelength above, at least for our conversation, a lot of where we can put money in the, 5, 10, 15, even 25 range per asset. You're not being affected by this. And so we just have a lot of increased demand. We have population growth. We have user demand. A lot of companies are also placing regional distribution here. And so it's really just a great time to be an industrial in DFW.
Yeah, I agree with your sentiment exactly. And I'm in a market that's similar to Texas, where we have a heavy exposure to oil and gas, but we've still seen that warehousing and distribution element of industrial really skyrocket. There's record demand for it. Absorption is high right now. But on the other element, we also have a lot of those properties geared more to the oil production, the manufacturing side of it. And Dallas-Fort Worth probably isn't as affected as another market like Houston, as an example, but you would certainly have some oil field buildings that are catered towards that production and manufacturing. What are you seeing in those types of buildings? And not necessarily specific to Houston, but for those buildings that are designed for manufacturing or for oil field production, services or equipment storage manufacturing, what are you seeing in that area?
Yeah, again, I don't have maybe as much a finger on the pulse as day to day, but what I hear is that a lot of the contraction that occurred in 2014, 2015, when oil was at the recent low, it was like $40 a barrel.
Mhm.
That contraction, the industry hasn't really overcompensated since then. And so they've stayed small, and there's not really going to be more movement in that industry. I think more volatile area would be like West Texas. And so anything that's out in West Texas, where the actual oil fields are, they're storing pipeline, valves, all that equipment. That's much more volatile in Odessa, Midland, around that Permian Basin.
Yeah, that makes a lot of sense. And you guys have had a lot of net immigration into Texas, a lot of people fleeing California. I think that that's only going to continue to be a trend going forward. So Texas is seeing a lot of that population growth, which fuels all that e-commerce, all the distribution centers, everything that needs to be there. So when maybe that's a good spot to transition into your particular portfolio, because I really want to get your insights into you're wearing your cowboy hat now. Now I need you to wear your investor hat as what you're putting your own money into. How are you evaluating properties in terms of an opportunity? What are your general criteria? What are you looking at? And perhaps you could even address just what you currently own, so we can get a better sense of properties that you've bought.
Yeah, absolutely. So as an investor, I try to invest in the things that I know, and so I know industrial real estate, and it's really proven, pretty fortuitous for me in terms of an investment thesis. So what I've started with is, trying to keep things as simple as possible. It is not my full-time job, so I'm not a dedicated investor 9 to 5 kind of thing. And so what my thesis is really a growing population with growing demand for services. I really believe in increased e-commerce penetration, as well as more manufacturers taking control of that distribution themselves. And what I mean is, when you're buying your Nikes online, instead of going through the middleman with FedEx, instead of having to do that last mile with UPS, a lot of them are stockpiling many more regional warehouse and then taking on some of that delivery, or at least controlling that final mile, or controlling that localized inventory, so they don't have to rely on a network of third party. So anyway, so that being kind of the guiding macroeconomic, how do you develop a thesis that works in terms of my dollar amount and my investable capital? I think earlier we talked about these, 100, 200,000 square foot buildings. Great. Even if it's fully leased and got a great credit tenant, that's not something, that myself or friends and family, we're going to pull together, scrape together couch cushions to acquire. It's a little bit outside. So that said, these specific assets that will still benefit to me are these kind of regional, just service companies, right? They're people with trucks, they're people with trailers. They may have inventory, big and bulky, washing machine delivery, washer, dryer, appliances, construction materials, anything that requires space to serve a population. And again, this is a residential population, maybe, as opposed to an industrial user. You talked about oil and gas. So for me, I would not look at specific properties if they were serving a niche industry of an oil and gas, tanker truck refurbished company, right? That's a little bit more industry volatile, versus I believe in the residential growth. And so if you have residential service companies, so think of regional plumbing companies, electricians, roofers, anybody who is storing materials, has maybe trucks, vehicles, and they need some office space. That's the specific assets. And then even more beyond that, we're looking at least 3 years remaining on a triple net lease. We like single tenant. I think we have 2 buildings right now that are single tenant. So we've already kind of hedged some of that risk. I know I talk to a lot of investors and say, I don't like single tenant, it's risky. And I say, yeah, but once you've underwritten a lot of properties, you realize how much effort and time it takes to underwrite tenants. And once you find a good one, I'm kind of the mantra, just double down and do a single tenant building. And the flip is, as opposed to having like a small bay or multi-tenant with 10, I would rather buy 10 buildings and diversify that risk across 10 buildings. So obviously it takes time to get up there and you're taking a little more risk on the way up, but that's okay. Because again, specific assets, we're looking for 3 years left on the lease, triple net. We want to look at the tenant business and look at either high level, they don't have to be audited financials, but we do want to see some level of detailed financials to see some growth or growing net income. That's okay as well. But yeah, other than that, I mean, it's pretty open. Maybe a 20-foot clear height. I don't like to see too much office, so like less than 20%, ideally 10 to 15% of office. Dock high, grade level, that's not too particular. As long as a tenant is able to use it, I'm comfortable either with the cost to add that later or finding a tenant and kind of understanding what that looks like as is. Because again, we're doing the kind of core coupon clipping industrial investment. So we're not looking to change things up. We're not looking to do a huge value add. If the tenant likes the building as is, we'll come in with a small CapEx budget just to pretty it up for them and be like, hey, here, we're the new owners. And if we raise your rent, but we're doing something tangible in return. So we don't have a huge value add. There's not a lot of CapEx. It's really just acquire, transition, take an inventory and put a maintenance schedule, a CapEx schedule, and then just collect rent. And really, the two properties that we have a 42,000 square foot building and a 37,000 square foot building. And they're all great tenants. They do ACH, they do automated payments. The debt goes out automatically. And so I really don't do anything. So we're actually, we're self-managing these with kind of captive management as well. But in the sense that I'm responsible for making decisions on the property management level, I have some staff, I have full-time staff, but I'm kind of, the one in charge. We don't do anything, right? It's really those triple net investments that I think you expect.
Yeah, that you just add a ton of value and information there. And the one thing that I really gravitated towards is your sentiment about having single tenant buildings versus what a lot of people think of when they're considering industrials to have a multi-tenant building. And I've heard this from other investors as well. There's really both sides of the fence there, where some like having the multi-tenant base so they have a little bit more diversification. But I've also heard a lot of investors like yourself that say if you get one good tenant and you can build on that relationship and you could potentially keep them long term, that's only one tenant that you have to manage versus potentially having to manage 10 or 15 tenants in a building. So I agree with your points there about there is benefit to only having a single tenant building, and for you it makes a lot of sense. One question that came to mind there is what was the appeal to industrial when you first decided that that's something you wanted to invest in? Why not multifamily or office or retail? What was the allure with industrial?
Yeah, I did do an overview, right, of those different asset types. And I definitely was drawn to multifamily. I felt a little bit turned off just because of the gurus. And I had known personally some people that paid, ridiculous 5-figure amounts for coaching, for this mentorship. And then they left with nothing, right? They didn't close a deal. They never took down an asset. And to me, it was just wasted money. So kind of left a bad taste in my mouth. I don't have anything against the asset class. I have some great mentors that, made a lot of money in it. And it is, true. You always need a roof over your head. In a recession, people are going to trade down to an apartment. And in boom times, you're going to have more people separating roommates and renting their own place. So I really believe in it. I think that it is just really a competitive space, and that you have needy tenants, right? On a spectrum, I was looking for a user base that wasn't going to bother me, because I knew at this point in my my life with the wife and kids and running the law practice, I don't want to manage a lot. And even if people that have a property manager, you know that as the owner, you still have a lot of decisions to make. If you have a class A multifamily, you're going to get a lot of issues. There's going to be a lot of complaints. You're going to get a lot of threats of lawsuits when things, happen. And so I didn't want that type of user. So for that same kind of vein, I wasn't too interested in office. Office tends to be pretty picky and high demand users. Hospitality, again, I knew that hospitality was great, but it's very fickle. You're very subject, your RevPAR and your daily bookings. I knew some people from the Expedia, from some of this, travel side, and it's a cutthroat business. I mean, some of those SEO and search algorithms, if your hotel just kind of gets downranked in Google, you can lose bookings for a few months until you figure out what's going on. So again, also high demand guests. So again, that kind of leads me by a process of elimination in terms of cash flowing, coupon clipping, industrial users. And again, in my experience and a lot of hundreds of tenants, they're the lowest demand users. Maybe I'll throw in a quick point too. When you have multi-tenant, individual industrial users are low maintenance or low handholding. But when you have multi-tenant, that's when they kind of tend to collide. And so I see more tenant to tenant complaints about noise or dust or trash or whatever in a multi-tenant. But if you have a single tenant, they own the whole building, they just run it however they want, their level of cleanliness and how they run operations. So that's a trade-off. I think is almost like a personality conflict when you have multi-tenant. But that's what led me to industrial, was really just a process of elimination. Not wanting to do a lot of work, but very happy with, we're in the high single digits, but if it's 9% cash on cash and that's automatic, I'm perfectly happy with that. It hedges some inflation risk with the triple net. We fix our debt. So fixed debt as an option is great. But yeah, that's how I ended up in industrial. And I've just dove in with 2 feet and really happy so far.
Yeah, I love the background on how you looked at every asset class. And I'd piggyback on your comments by saying I've met a lot of successful investors that have done multifamily or they've done an office or retail, and that was just their specialty, and they got to know it really well, and they've done well by it. But I completely agree with the sentiment about industrial real estate just being a lot more stable. It hasn't had those big swings and dips that other asset classes have experienced. And I share similar stories with you about just it being a lot more hands off and not requiring as much active management on that. So I appreciate the background you gave on that. So I guess if we've covered why you got into it, why you decided industrial, we talked a little bit about your portfolio. What's your end game with this? Where do you see this portfolio growing, or where do you expect to take it down the road?
Yeah, absolutely. So I think that always having a plan is really important in terms of how I do everything. I'm a big, Jocko fan. So
Yeah.
he's discipline equals freedom. And I think part of that is goal setting. And again, your goals can change, you can be flexible, but you've got to put something out there, and it gives you a purpose kind of every day. And it can be a high calling to trying to achieve those goals. So with that said, maybe we'll do a edit.
Okay.
So if we take a high level view, this is gonna, excuse my artwork here. That's the state of Texas. We're here in Dallas. This is Houston, Austin, San Antonio. We're here in Texas. The general principle that I'm trying to implement is a 5 to 10 year roll-up or portfolio investment, which is finding like-kind assets that are in a similar geography or sub-market. So I talk about this in a little bit of videos, defining your market. It can be very broad. I think that some people like Sunbelt, that can be a market. If you're deploying $500 million, Sunbelt will count as a market. If you're deploying $100 million, you probably need to be narrowed down on Houston or even North Houston. I think that's small enough. But if you're deploying $50 million, you may need to drill down near DFW airport or something as a submarket. But my general idea is to find similar asset types. So this is typically the age of the building, the types of users, maybe a specific industrial outdoor storage use, refrigerated warehouse would be a sub asset class. And then building up a portfolio that the aggregate price is now attractive to larger buyers. And these larger institutional buyers or private equity funds are able to pay a lower cap rate, but they're not going to be shopping around for the $3, the $4, the $2 million deals. However, they will acquire them from me if we can assemble 10. And so basically the idea is I have more time than money on the real estate side. And so I can get paid to sift through some of the mom and pop listings. And I was telling Chad, the best example that I see, I get excited when I see the rotated PDFs, for the P&L, and I get a cash flow that's, crooked PDFs that are kind of hard to read, but that's okay. That's for lack of it, it's an unsophisticated seller. And again, nothing bad against them. They probably made a lot of money and they have more money than I do, but they are presenting, they're not going to get the top dollar because A, their individual purchase price, and B, just the presentation of information can be a little bit too frustrating for the analysts in New York who are churning through hundreds of properties, a week. They're not going to waste time when they can't get the numbers that they need in the OM. So that's basically this idea is you pick up a series of properties that all meet your own individual criteria. And if I can buy 10 $3 million properties, and let's say I'm buying them at a 6 cap, I can assemble that portfolio. And instead of being worth $30 million, it's now going to be worth 35 or 36 just by virtue of being able to sell at a 5.8. And there are lots of buyers out there, I'm telling you, that will shop at a $30 million price point minimum, at a minimum, and they pay upper fives because, this is my end game, is to assemble all my information. I like to think I'm neat, I'm organized, I'll have all the leases. I'm talking about buying properties sometimes that have a month-to-month lease with a tenant. And when I ask about the triple net, they say, yeah, it's triple net. They pay property taxes and insurance. I'm like, okay, so it's net, and they have to think about what categories of expenses they add back in. And sometimes it changes, but these tenants, it's a very fluid situation. And so again, there's value in adding a robustness or some structure to all of these properties that fit your criteria. You assemble and acquire them, one by one or two at a time, until you have a minimum size. What word am I thinking of? Not a quota, but a
threshold.
Yeah, a threshold, or like they always talk about it like in those diversity cases, the affirmative action. When you have like enough minorities to be I can't think of it. Okay, my legal training is failing. I'm talking about like in all Supreme Court cases, or when they talk about affirmative action, you need enough to have like a threshold.
Quorum.
I think it's quorum. I'll figure it out. I'll remember later. But yeah, so once you cross that threshold, you unlock a different pool of buyers. And that's really the end game, is to assemble these cash flowing, hands-off, low maintenance properties. I'm okay to go through the due diligence sequentially, because again, I don't have $10 million of equity burning a hole in my pocket right now, but I will have $1 million or $2 million every year for the next, 6 years. Mm-hmm. And so that's the end game. I think it's a very simple formula, and it's a kind of this get rich slowly thing. I've got plenty of things to do with my time otherwise, having fun and making the YouTube videos and going to the racetrack. But that's really the plan. And I think that a long-term focus kind of gives me balance to what I do on the day-to-day to achieve that.
Yeah, I love the point that you made even a little bit earlier about all those gurus who talk about how easy it is to make money in anything, right? We see it in multifamily a lot because that's the one that these real estate investors are always pitching, and I get really turned off by that as well because I think it's very difficult to make money quickly in real estate, whether that's residential, multifamily, any asset class. I think it's actually really difficult, but we hear all these stories, right, of a guy who bought a house and he sold it 3 months later and he made 100 grand, or a guy that bought a multifamily and he sold it a year later and he made $1 million. We always hear these stories, and those become the case studies that these gurus use when they're selling either a course or they're selling a program. Yeah, like you, I've heard of people that have spent 25, $30,000 on a program. And to me, it's really, it's disheartening because people are paying this money and they're not coming away with anything other than being really discouraged. And I said to someone the other day that these gurus will always talk about the success stories, right? Much like a gambler. A gambler will talk about all the money that they've won, but they don't talk about all the ones that they've lost, all the times that they've lost money. And kind of how I described it is someone might have a story to tell, a successful story to tell about what one time that they actually were successful. They have a story to tell, but that doesn't mean that they have a course to sell. And it sounds really cheesy, but I think that that temptation to buy into these courses and stuff to chase that quick buck is really dangerous, because I share the exact same sentiment that real estate investing should be a long-term strategy. For me, I even look at my holdings that I could conceivably hold these forever. It could pass them down to future generations. I don't have a necessary exit strategy because I think the longer you hold a property, the better you'll actually fare with it. So I love the approach that you're taking on that and emphasizing that your strategy is long term, much like mine. I do want to talk about your YouTube channel in a second as well, but I think one of the things that we share in common is that neither one of us are trying to say that this is an easy thing to get into, or nor should you expect quick money. This is a long game, but for those that are prepared to learn it, to study it, become students of the industry and students of the market, there's an opportunity to make really good returns over time. So I really do appreciate you hammering that home because that resonates with me on how I approach things, and I hope it resonates with people that do have that long-term horizon as opposed to just that flash in the pan quick buck. That does lead me to your YouTube channel because that's how we actually first connected. Is there's very few people talking about industrial real estate on YouTube, and the content and the quality of videos that you're putting out are second to none. So I'm going to leave a link
Second to
in.
your channel only.
Well,
You're
you're actually going out there and showing things. I'm just sitting in front of a bookcase and and trying to sound smart. You're the one actually out there showing people this in real time. So what prompted you to do the YouTube channel, and what's in the future for that channel as well?
Yeah. So I started my YouTube channel, I guess about the same time you did back in the pandemic, right? So this is in 2020. I was stuck at home and I said, gosh, I used to talk to people about these things. I used to have lunch, and what's the best way for me to kind of educate people and inform them about this? Because I get asked the same questions a lot over and over again, and people kind of get interested and they're busy. I understand you have your own life. You've got maybe another W-2 job, but I just wanted it to be a resource that I could share information and kind of communicate in what I thought was a pretty effective way. Because I've always kind of liked videoing, and it's I would say kind of a hobby of mine. My best story is on my college applications, and you get to do an essay as part of your applications. And I hand wrote this. This was dating me how old I am. So I hand wrote an essay and said, I wish you would ask me what it's like to make a movie. And I would have talked about the creative process and the planning and how excited I get kind of running through it in my head, and these great one-liners I'm going to deliver that never come to fruition. But, I used to do like home movies in high school a lot for projects. Anytime we have a project, I'm like, can I submit a video? And they're like, sure. It's easy for us to grade, just watch it. But yeah, so that's why I started it. It's been a really, for me, incredibly successful because people watch the channel. And again, they don't need to hire me, but they'll just reach out. And I've built a lot of great relationships from people that watch the YouTube and just email me. And that's, really my goal is just to have people contact me if they have questions. And we've done a lot of great projects through that. And so, yeah, I do like to go on site. That's kind of my shtick, if I have any, beyond just general commercial real estate, is going on site and looking at some of these buildings, right? So I have a client that did a 108,000 square foot brand new building down in Houston. So we walked that building. So that video is going to come out soon. I'm going to walk through a flex deal that we passed on to personally buy, and kind of go through that decision-making process of why we ultimately passed on it. It was me and another guy. And then I have another client, just doing various things in their buildings, and, sharing the progress, because again, there's just no content. If there's multifamily, sure, you can't throw a stick without hitting 15 multifamily lenders and 30 brokers and 5 lawyers. But
I love it because the exact same reason why I started the channel. It was right as COVID hit, and I was at home, and it's like, well, what am I going to do? The phone's not ringing. I literally have nothing to do, and I can't sit still. So I was like, this is the perfect time to start a YouTube channel. And like you, I've loved making videos. I've been an amateur photographer for 10, 15 years. So I had a lot of the equipment, and it was like, you know what? There's something I'm passionate about. I love talking about industrial real estate. I need something to do. It was just the perfect place at the perfect time in a very non-perfect time in humanity, granted, but just everything else aligned to do it. And like you, I see it in your videos where you're just so excited and passionate to talk about it. And I think that's genuinely what people want to see, is just somebody that knows it, that's doing it, not from a theoretical standpoint. We're both coming at it from professionals in different industries, but who have taken our combined experience or collective experience and use it to actually invest in industrial real estate ourselves. And I think that there's something insightful and perhaps even powerful to have that background of people that are excited about it and understand storytelling and filmmaking and want to marry those two together to produce a product. I love it. I'm a big fan of your channel, and more importantly, I'm just a big fan of you. And we talked last time we chatted. I'm coming to Texas sometime in 2022, and I'm gonna come to Dallas, and we're gonna tour some buildings, because I'd love to just see more about the Dallas market. That's one of the few cities in Texas that I haven't been to, so that is on my list of things to do next year.
Awesome. Well, you're welcome anytime. And anybody watching this, reach out. I'm happy to provide referrals or opinions for whatever they're worth, but at least it's something. I try to tell people too, this is just my opinion, but at least it's a data point of somebody who looks at it. But sounds good.
Absolutely. So I'll link to your YouTube channel in the description, and any other way that people can get in touch with you.
You can put my website. I will do a little plug for my book, Investing in Industrial Real Estate. It's on Amazon, and I'm happy to report there's some paperback sales now. So I'm in that positive territory now. But yeah, it's really a overview, kind of for somebody who's not familiar with triple net leasing, because again, that's been my number one fear, or what's holding back investors who are coming either from a residential, a multifamily side. The leasing is what really just intimidates them. It's not the building, it's not the structure, the financing, that's all fine. It's just, how do we wrap our heads around this lease, and how do we become experts in understanding it, knowing that no two leases are the same, and there's a huge delta in triple net, whatever triple net leasing means. So check out the book on Amazon. That's another good way to get a hold of me. But
yeah, and I've read the book, and I highly recommend it as well. So I'll put a link to the book in there as well. Thanks for bringing that up.
Fantastic. Well, I really enjoyed it, Chad. Let me know when you're in Texas, and we'll see you when
Absolutely.
you come down.
Yeah, looking forward to it. Thanks so much again for jumping on the call, and we'll keep in touch as well.
All righty.
Okay, thanks, Ron. I think this really gives some great insight into how an investor can approach the industrial real estate market. As Ron mentioned, he considered all the different asset classes before determining that industrial was right for him. And industrial might be right for one person, but not for the other. And that's completely fine. But I think if you are going to want to look at industrial, whether you just want to potentially look at it as an option and maybe you end up ruling it out, I think that's fine as well. But I think you do need to do a deep dive into understanding what industrial real estate is and what it isn't. And hearing from a guy like Ron is certainly helpful. Let me know if you have any follow-up questions on either the Texas market or just how Ron underwrites these deals or gets them financed or stabilizes them. I'd be happy to invite Ron back on next year as well, whether it's just about Texas or him as an individual investor. So let me know if you in the comments below if you have any further questions for Ron. Really do appreciate you watching, and I'll catch you in the next video. Thanks.
Try to use this whiteboard.
And by edit, this just means that this little clip is going to go in the bloopers.